So it's great to have you on board. And at the lectern we have Brad Sewell, who's a director in Robinson Sewell. Brad's professional career in rural and business finance has spanned over 20 years. He's had senior customer relationship roles with prominent banks and specialist rural lenders throughout the country. Brad's rural finance and banking experience is grounded by a lifetime association with agriculture, which includes extensive experience working in beef, sheep and cropping enterprises in New South Wales and Queensland. Please welcome Brad Sewell.
Thank you, Fiona, and New South Wales Farmers, and thank you for all attending today. Welcome to the world of finance, your industry's biggest cost and probably the least understood cost in agriculture. And what I'd like to do in my quick presentation today is give you some insights into what's going on in agricultural finance and work on some case studies and even some recent situations that have arisen even in the last 12 hours. As Fiona said, there are two directors in Robinson Sewell Partners, myself at Dubbo and Ian Robinson at Wagga, and we work 24/7 representing farmers in their negotiations for property acquisitions, restructures of debt, family succession related finances, etc. And we actually cover the whole of Australia. Three farmers are at a barbecue, and generally at barbecues they talk about the weather, commodity prices, sport, etc, but invariably they start to talk about finance. But typically they only ever talk about margins. And the first farmer, Farmer A, he jumps in first because he always feels that he's on a good rate. And he says, I'm on 1.5%. And the other two guys are going, geez, that's all right, 1.5%. And the second guy, Farmer B, says, well, I'm on 2.8%. And the other guy's going, geez, that sounds a bit high. And the third guy says, I'm on -1.5%. And the other two guys go, how does that work? And the third guy goes, well, I'm not quite sure. The bank manager explained it a few years ago, but I can't work out how you can have a minus margin. The reality is that margins are fairly irrelevant, but they're the ones that are talked about the most. We see so often around Australia farmers getting caught by the perception that the margin is determining whether they're on a good deal or not. But if you look at these, and these are real rates, the guy that everybody thought was going really well actually has quite a high base rate, 6.35% all up. The guy who thought he was on the worst, or a margin that represented the highest interest rate, is actually on 4.95, and the guy who wasn't quite sure is right in the middle. These are real rates, okay? The real cost of funds, yesterday at 10 o'clock, was 2.15%. Okay, everything over that is effectively bank margin. So ignore margins, just look at your all-up rate. Basically anything over around 2.15, 2.2 is bank profit. Okay. This is a case study of a deal that was settled about 5 or 6 weeks ago for some clients in New South Wales. It's a $2.2 million deal. The top line represents the interest rate they were on before they engaged our services to do a tender. The black numbers represent the interest that's charged on the balance of their debt, and the red numbers represent the interest that's charged on the limit, regardless of whether they use the money or not. These clients, as you can see, were on 6.8%. We took their business to tender. The responses are the 4 items below. The A quote was from their existing bank. So their existing bank went from 6.8% to 5.54. However, 3 other banks were asked to tender. One came in at 5.23, 4.93 and 5%. Now the clients actually changed in this case. We settled about 5 or 6 weeks ago, as I mentioned. You can see some of the other banks, the red markers there indicating that their rates are against the limit as opposed to the balance. So the clients obviously selected the bank that represented the lowest overall rate, and also only charged on the balance of funds used. Now, as any of you know, when you've gone to shop around, banks don't present it like this. They don't give you red numbers and black numbers. They generally put the numbers within 4 or 5 pages in their quote. Sometimes they split the products into separate documents, and it's nigh on impossible for people to really understand what cost of funds they are paying. Okay, so we specialise in breaking that down and presenting the outcome of our quotes and tenders into this sort of format, so that clients can really see what is the best deal out there. In this particular case, the current bank was on 6.8%, but we ended up at 4.93%. The current bank represented $149,500 interest, the new bank $113,000, so there's a saving of $36,000. One of the important points, you'll see that there's fees in the new bank. People sort of say, oh, we don't like fees, but the reality is just look at the total cost of funds. Look at what your total cost of funds is and what you're saving. Now, this is a real case study. Another issue we face with people being generally reluctant to test their finances, and you've always got to look at this: whose money do you want? Whose pocket do you want this money in? Yours or the bank's? Okay, but one of the issues people have is they say, well, we really like our bank manager, he's a good bloke. So we're not sure we really want to change. 50% of our clients don't change. They stay where they are. I was talking to a client this morning. We did a tender, we saved him $365,000 a year. A big debt, but he didn't have to change banks. We simply put it out to tender, and his existing bank wanted to keep the business. On average, we save around $30,000 for our clients. Okay, that's right across from the very small deals. We work anywhere from $200,000 up to $45 million. So what I'm saying by this slide that's in front of you is that your current mate, a new bank manager, there's lots of good bank managers. Every bank has a good bank manager, or many of them. So you can find a good bank manager at a lower price, okay, or a less expensive rate. And that's what we try to do in our tenders. It's not all about interest rates, it's about finding the right manager at the right price, at the right structure. Because relationship is important, we recognise that. Presenting your information to the banks, typically farmers present a statement of assets and liabilities, a cash flow forecast, and some financials. But the reality is there's actually at least 10 other key pieces of information that banks like to see. And the more of those you cover, the easier you make it for a bank to make an assessment, and the more desirable your business is. It's all about creating competitive tension. Some of those other 10 key pieces of information are simply around talking about the performance of your bank accounts, tax debts, etc., etc. So it's really important that you present your information professionally, because if you want to get the maximum reduction in your cost of funds, whether it's with your existing bank or whether it's worth changing banks, then presentation is critical. As I said at the start, Sewell Partners cover the whole of Australia. We have clients in Queensland, Western Australia, South Australia, New South Wales, predominantly where we're based, and Victoria. We've renegotiated over $325 million in debt. We are actually rated as the #1 business finance advisor in Australia, and out of 14,000 finance advisors in Australia, we're actually rated as #1. As you can imagine, the bulk of those 14,000 advisors are in the capital cities. So for two guys in country New South Wales to be considered, and who specialise in ag, to be considered the overall top finance advisors in Australia, it's well worth giving us a call and having a talk about your situation. What I just want to talk about quickly is that there's been a quantum change in competition between the banks just recently. About 4 weeks ago, my partner Ian Robinson, it was a big deal, it was $12 million, put a $12 million deal out to tender. I was up around Burke at the time and got a text saying 3.87%. That was the total cost of funds for that transaction, which I thought, wow. We could see it moving that way. We had heard of similar large-scale transactions. But what was really exciting at 4:30 this morning, when I got up to look at yesterday afternoon's emails, I submitted a tender on Monday for a couple, a husband and wife, 400 cows, and she's a nurse. It was a $1.7 million deal, and the first quote came back yesterday afternoon at 4.43% all up. We've been advising our clients recently that anybody, and these guys haven't got great numbers, you know, average equity, average security, average income. We've been telling our clients that you should be, anything over $1 million, you should be around 4.5%, 5%. It was 5 to 5.5 not so long ago. We're now starting, on the basis of what we've seen in the last few weeks, starting to wonder whether the competition is starting to move into the 4 to 4.5% mark. Okay, now we know we have clients that are under 4, but they're large scale. But just for mainstream, you know, without getting too excited, it is getting pretty competitive out there. We use our competitive, we're an anonymous buying group. We use the strength of our $325 million to drive the banks down on price. All we need is 15 minutes on the phone to do a quick assessment. If we think there's benefits there to be gained, 90 minutes on farm and a cup of tea. We don't charge anything for that. As Fiona said, we're aligned with New South Wales. There's some benefits there to members, and so we'd love it if you could give us a ring. And yeah, that's my own timer. Look up our website, have a look. There's some phone numbers there. We'd love to see you, talk to you, and give you some feedback. Thank you.
Thanks very much.